What exactly is stagflation, and why does it send shivers down the spine of economists and investors? Let's break it down. Recently, the Federal Reserve issued a warning that the US economy is being reshaped, largely due to President Donald Trump's economic policies and especially tariffs. Tariffs are taxes on imported goods. While they aim to protect domestic industries, they often raise prices on everyday items. When prices rise while the economy slows down, that's when whispers for stagflation begin. Stagflation is the economic version of a triple threat. It's when you get high inflation, high unemployment, and slow economic growth, all at the same time. It's rare, it's painful, and for central banks like the Fed, it's one of the worst-case scenarios. Fed Chair Jerome Powell is not sounding the alarm, at least not yet. But despite his calm tone, the Fed's own projections are giving off serious stagflation vibes. Here's what they are now expecting: unemployment rising to 4.4%, inflation ticking up to 2.7%, GDP growth slowing to just 1.7%. That's worse than their December forecast across the board. Even JP Morgan's chief US economist called the changes stagflationary. But let's take a step back. What does real stagflation look like? Flashback to the 1970s. An oil embargo triggered a massive spike in prices. Inflation soared, unemployment surged, and the economy all but frozen. The Fed tried to fix it by raising interest rates. Boom, recession. Then they cut rates to fight the recession. Boom, more inflation. It was a vicious cycle, and the only way out, a deep and painful recession. That's the kind of scenario policymakers really want to avoid. Now we are not there yet. Powell said last May, "I was around for stagflation. It was 10% unemployment, high single-digit inflation, and very slow growth." Latest numbers don't even come closer to this. But investors, businesses, and economists are still watching closely, because stagflation, even a mild version, can be tricky to navigate and even harder to fix. So, will the Fed manage to keep inflation under control without hurting the job market? Only time and a few key decisions will tell. Don't forget to like, subscribe, and hit the bell for more insights on the economy and financial markets. Thank you for watching.